Expected, Tim, thanks for having me, but also a tremendous historical development that is more than a decade in the making. VanEck, the first ETF sponsor to file for a spot Bitcoin ETF in 2017. We've spent the 7 years putting a lot of effort into education and table setting. We've done breakfasts here in our New York offices. We've got 200 pieces of Bitcoin research on our website, and we just feel tremendously optimistic that these products, if they do indeed trade tomorrow, and we're still waiting on the S1s to be approved, hopefully in the next hour or so, to make it totally formal. But these products can unlock significant demand because they just offer a large cost savings for the end client. And we estimate that Bitcoin investors will save 90% plus compared to the retail experience on Coinbase. And I just put it to the listeners and to you. When was the last time a 10x improvement in access costs didn't catalyze wider adoption of a new technology?
Right.
So we think there's going to be $2 billion plus in flows over the first couple days, $40 billion over the first year, and we think this is going to power Bitcoin to an all-time high in Q4 after the U.S. election.
And I will point out that the SEC chair, Gary Gensler, yes, the SEC approving them, but he also says investors should be cautious on crypto. And if you read those filings with the SEC, there's a long list of risks. I want to bring in Bloomberg Intelligence senior ETF analyst Eric Balchunas to join the conversation with Matt Sigel. Eric, your thoughts, obviously momentous, I guess, for the crypto industry, but there's still a lot of questions about the risks for investors here.
Yeah, look, I mean, part of the appeal of Bitcoin, I think, Matt may disagree with this, I see it as the risk as being a feature, not a bug. Over the past 20 years, portfolios have changed. Everybody goes cheap 60-40 with Vanguard type funds, pays almost nothing. It's beautiful, but it's boring because you got to wait for that to sort of compound over like 2 or 3 decades to get the real money. So people are like kind of looking for stuff to sort of have fun with, speculate with, cure their FOMO, and there's nothing wrong with that. And I call that the hot sauce bucket. I think Bitcoin and a Bitcoin ETF will fit into that bucket, just like thematic ETFs, ARK. Maybe you have a stock trading account. Like, there's nothing wrong with that. I think it's a behavioral hack to keep you from touching the other part of the portfolio that has to grow. So I am bullish on them, but bullish as a small allocation in the portfolio purposely because it has nothing to do with your 60-40. It is a different kind of investment. And we've seen a real lane open up for hot sauce type ETFs.
And I will say, Gary Gensler also saying in this approval that Bitcoin ETF approvals bring more oversight, Tim.
Hey, Matthew, I want to go to you and just get you to react to what Eric Balchunas said. So let's say people do have this, low fee portfolio that's 60-40. They want to add a little hot sauce, but just, single digit percentage, and a Bitcoin spot Bitcoin ETF is a good way to do that. In your opinion, does it ever get past just that little bit of hot sauce that Eric was talking about? Does it get to widespread that people actually put in a significant portion of their assets?
We think it will, but we think that that's likely to happen more outside the U.S. than inside the U.S. And if you look at the last couple months, yes, Bitcoin has been trading strong in part because of the ETF optimism, but also in tandem with the weaker dollar. Dollar was down sharply both in November and December, partially because of the FOMC, but also like the BRICS group expanded to include 5 additional countries, including Saudi, the UAE, Iran, Egypt. The market also took cues from significantly positive crypto policy support outside the U.S. For example, Nigeria changed their ban on banks doing business with digital asset providers. There was a very influential Saudi cleric who acknowledged Bitcoin as a permissible asset. And then you've got Argentina, where the new administration has said that contracts settled in Bitcoin will be legal under certain conditions. So yes, we see state actors and state-sponsored actors buying Bitcoin for national reserves, mining Bitcoin as a way to exploit energy that would otherwise go to waste. It may be hot sauce for, the privileged financial elite here in the U.S., but around the world, it is a necessary means of transacting value without relying on Fed monetary policy, which, has been volatile to say the least.